crypto or stocks. If you're trying to figure out where to put your hard-earned money, you've come to the right place. Both can make you money, both can lose you money, and they both come with completely different levels of risk. Today, we're going to break down the pros and cons of crypto versus stocks, clearly and realistically, so you can make a smarter financial decision that actually fits your goals. Let's get into it. First, let's cover the basics so we're all on the same page. What exactly are we talking about here? Cryptocurrency is a digital or virtual asset that runs on something called blockchain technology. You've heard of Bitcoin and Ethereum, but there are literally thousands of other cryptocurrencies out there. The key thing to remember is that this market is still very young, it's incredibly volatile, and for the most part, it's still largely unregulated here in the US now. Let's talk about the stock market. When you buy a stock, you're buying a small piece of ownership in a real, tangible company. Think Apple, Amazon, or Tesla. The stock market is one of the oldest, most established investment markets in the world. Especially in the US, it's backed by decades of history and data, and it's heavily regulated. So, let's start with the exciting part, the pros of crypto. The number one reason people are drawn to crypto is its massive growth potential. We've all heard the stories. Bitcoin went from just a few cents to tens of thousands of dollars. People who got in early saw absolutely life-changing returns. That kind of explosive growth is almost impossible to find anywhere else. Another huge pro is that the crypto market never sleeps. It's a 24/7 global marketplace. Unlike the US stock market, which has set trading hours, you can buy and sell crypto anytime, day or night, weekends and holidays included. This gives you a ton of flexibility. Then there's the concept of decentralization. This is a core principle of crypto. There's no single bank, government, or institution controlling it. For many investors, this independence is a huge plus. Everything is recorded on a public ledger, the blockchain, which offers a level of transparency you don't get with traditional finance. And finally, it's incredibly easy to get started, even with just a little bit of money. Apps like Coinbase, Kraken, Robinhood, and even Cash App allow US investors to buy crypto with as little as $1. The barrier to entry is extremely low, making it accessible to almost anyone. Okay, now for the reality check, the cons of crypto. And the biggest one is extreme volatility. While the price can shoot up, it can also crash down just as fast. It's not uncommon for crypto prices to drop 30, 40, even 50% in a matter of days or weeks. These dramatic swings are completely normal in the crypto world, and you have to have the stomach for it. Another major risk is the limited regulation in the US. The SEC is still trying to figure out the rules. They're deciding which cryptos are securities, which are commodities, and what the guidelines should be. This uncertainty creates a lot of risk. A coin you own could suddenly get delisted from an exchange or face new restrictions, causing its value to plummet. Next, you have to be aware of scams, rug pulls, and what we call meme coins. There are thousands upon thousands of crypto tokens out there that have no real value, no purpose, and no team behind them. They're created to generate hype, pump up the price, and then the creators disappear with everyone's money. It happens all the time, and that brings us to a fundamental difference. Most crypto is not backed by anything tangible. Unlike a stock, which represents a piece of a business with assets, employees, and cash flow, most crypto assets don't have any intrinsic value. Their price is driven almost purely by market demand and speculation. If people lose interest, the price can go to zero. Now let's switch gears and talk about the stock market. What are the pros here? The biggest one is long-term stability. Historically, the US stock market has delivered average annual returns of around 7 to 10%. It's the definition of slow and steady, but over time, it has proven to be an incredibly reliable way to build wealth. A huge advantage is the heavy regulation. Agencies like the SEC and FINRA have strict rules in place to protect investors. Of course, fraud can still happen, but it's far less common and much more difficult to get away with compared to the crypto space. This layer of protection provides a lot of peace of mind. Plus, you're buying ownership in real businesses. When you buy a share of a company, you're investing in its products, its brand, its employees, and its potential for future profits. You can analyze its financial reports and track its performance in the real world. For beginners, the stock market offers easy access to diversification through ETFs and index funds. An ETF, or exchange-traded fund, lets you buy a whole basket of stocks in a single transaction. For example, by buying an S&P 500 ETF like VOO or SPY, you instantly own a small piece of the 500 largest companies in the US. It's the perfect way to get started without having to pick individual stocks. And one more great perk, dividends. Many established US companies share a portion of their profits with their shareholders in the form of regular payments called dividends. It's a great way to generate passive income from your investments. Of course, the stock market isn't perfect either. Let's talk about the cons. The most obvious one is slower growth compared to crypto. You are very unlikely to see your money 10x overnight in the stock market. The growth is much more gradual. It's a marathon, not a sprint. Also, the market has limited hours. In the US, the main trading session is from 9:30 a.m. to 4 p.m. Eastern Time, Monday through Friday. While there is some limited after-hours trading, it's not the 24/7 free-for-all that you get with crypto. And don't underestimate the emotional impact of market crashes. Events like the 2008 financial crisis or the 2020 pandemic crash can wipe out 30% or more from the market in a short period. It can be terrifying to watch your portfolio value drop like that. However, the crucial difference is that historically, the stock market has always recovered and gone on to reach new all-time highs. Finally, the stock market really requires a longer time horizon. To see those solid, reliable returns we talked about, you need to be patient. Most successful stock market investors are thinking in terms of years, often holding their investments for 5, 10, or even more years to let compounding do its magic. So, after all that, which one is better for you? Here's some honest advice. You might want to choose crypto if you have a high tolerance for risk and you can handle watching your investment value swing wildly. You should only be investing money that you can genuinely afford to lose. It's also a great fit if you're passionate about cutting-edge technology like blockchain, DeFi, or Web3 and want to be a part of that future. But you have to go in with your eyes open, understanding that it's still a highly speculative market. On the other hand, you should probably choose stocks if you're looking for long-term, reliable growth to build wealth for something like retirement. It's the better option if you prefer lower risk and feel more comfortable in a regulated, safer investment environment. But what's the best option for most US investors? For many people, the answer is a balanced mix of both. A common strategy is to put the majority of your portfolio, say 80 to 90%, into traditional, stable stock market investments like index funds and ETFs. Then, if you want that exposure to high growth potential and you're comfortable with the risk, you can allocate a smaller portion, maybe 10 to 20%, to crypto. This strategy gives you a solid, stable foundation while still giving you a shot at that explosive upside. Let's wrap up with a few final pieces of financial advice for anyone in the US looking to get started. First, and this is the golden rule, never invest money you can't afford to lose. This is true for all investing, but it is especially critical when it comes to cryptocurrency. Second, if you do decide to buy crypto, always use well-known US regulated exchanges for your own safety. Companies like Coinbase and Kraken are good starting points. Third, diversify. Don't put all your eggs in one basket. This means not putting all your money into just one stock, and definitely not into just one crypto. Fourth, think long-term. Real wealth is built over time with consistent, smart investing, not by getting lucky on a random meme coin. And finally, the most important tip of all, educate yourself before you buy anything. Both crypto and the stock market have a place in a smart investor's portfolio. The real power comes from understanding what you're buying and why, and investing with a clear strategy, not with emotion. I hope this breakdown was helpful for you. If you've learned something new, make sure to hit that like button and subscribe for more clear, simple financial content. Thanks for watching.